This is week 1 of L&J Financial Podcast, November 22nd. What's going on, everybody? It's Lucas.
It's Julian.
And this is L&J Financial Podcast. Today, we're going to be talking a little bit about what this podcast is, and our mission is to motivate, inspire, and entertain the younger generation in finance, stocks, and mindset. And we're going to give you a little bit of a rundown of what this podcast is. So, Julian, what are some things do you think people can take away from listening to this podcast?
I'm Julian, and I am an investor and day trader.
Also, you do options, though, right? Too options trading.
I do options trading.
Mm-hmm.
I think that there's a really big opportunity with young people, and with technology, and I think it's really important to have a foundational base when it comes to investing at an early age. So that's why we're here to just talk about what we know and just share some knowledge.
Yeah, I mean, like, investing is one thing, but I mean, people that blindly invest into the market, basically you're just gambling at that point. That's why a very common misconception, and me and Julian will talk about common misconceptions in the stock market from especially the younger generation, when people refer to it as gambling or rolling the dice. And really, if you do it with a right mindset and the right attitude towards it, investing, obviously there's risks to it, but we'll teach you how to manage risks. And keep in mind that we are not financial advisors, so we're not, top 100 hedge fund managers. We're just, young kids doing it, but teaching and learning along the way. And we hope that you learn something in the process. Nonetheless, I'm Lucas. I like to value invest and swing trading, but more I like holding long for long periods of time, anywhere from 1 month to, I've only been trading for about a year and a half now, but 1 month, 3 months. And I really like looking for companies that are really undervalued, and I buy in large proportions, and I hold through turbulence and whatnot, but I really like seeking undervalued companies. And throughout this podcast and many weeks to come, we'll teach you how that works. But nonetheless, let's get started. Let's talk a little bit about the power of young investing. Julian, what's your take on that?
It's definitely something that everyone should take advantage of if they can. It just takes, just a little bit of learning, and you can have a really good base when it comes to investing and having a good financial path for yourself set up in your life. So I just want to talk about. Do you want to talk about maybe the overall market right now?
Yeah.
And what's gonna go?
Well,
what think's going on?
Now's an interesting time to be investing. I didn't start trading. I just turned 18 10 months ago. So, and that's right when everything became kind of turbulent. And I kind of don't really know what a normal market is. Because before that, I was trading under my dad's name with a small amount of money in paper trading, and I didn't know it was a booming market. Because I felt like you just put money in, you couldn't lose. Any stock turns green in 3 days, and kind of actually using my own money in trading now. It's very weird seeing how things are changing so quickly. What do you think about that?
Yeah, I think right now honestly is a really good time to start, at least just because of obviously the coronavirus having such a impact on sell-offs, and there's a lot of opportunities to get in on companies at a really good price. Whether if this was a year or two ago, that opportunity might have not have been there.
Exactly, and I think
COVID.
There's a lot of what's really cool I'm seeing right now. I don't know if it's cool because people are losing money, but it's the corrections. And if you don't know what a correction is, it basically means it can be a good thing or it can be a bad thing. When a stock or overall index or market drops, that's a correction if it was going up for a long time, and if it drops for a long time, starts going back up, that's correcting. And with that, you can win and get significant large amounts of money, or you can lose significant amounts of money, depending on how you play it. But I think with trading in a turbulent market, I think is a huge advantage, because when we enter, would you consider what we're in a bull market?
I wouldn't say right now. It's too hard to tell. But before, we were in a bull market for the last 15 years, and it's really just now is the first time we're seeing.
I wouldn't say 15. Let's say 10, 11.
But this has been the first year in a long time where we're seeing this much turbulence, as you said, up and down days.
Yeah.
It's very unpredictable. But being a new investor and not being someone necessarily that has 20 years of experience with, you know, all your stocks in your portfolio, being new and starting out, you can really get in at like a really good spot that you probably could have gotten in years ago at.
And like to kind of like add on to what you're saying, when you invest when you're young, you basically, I mean, obviously not all risk is eliminated, right, in terms of losing your capital, but investing young is the most, I mean, honestly, the biggest thing that you can do. I mean, that's the biggest advantage you have compared to every hedge fund manager, big investors, you know, the big banks. I mean, you have time. Time is the biggest and easiest compounding asset you can ever have. And if you invest when you're 18, 19, 20, 21, I mean, in 10 years from that point, I mean, you, no matter what the market is, I mean, you can see if it's averaging 7 to 11% annual gains if you're investing correctly, you can be up 50% or more on your money. And that's a conservative number, just investing young. And that's what we're pushing for. The message of today's podcast, our first podcast, is pressing the power and the urgency of young investing, because we're both very young. And we want to make sure everyone else knows that's our age that anyone can. And you don't have to be rich to invest in the stock market, Julian, right?
No, you don't. You you literally, you just need $20 maybe, and you need to be 18. But
well, maybe a little bit more than $20.
Yeah.
Depending on what you're buying.
Yeah.
I mean, if you're going to trade penny stocks,
yeah,
that's good. $20 can do it. But I say a recommendation, if you want to start, if anyone's listening to this and they want to start to invest in the stock market, they hear about it, they don't really know what it is, I highly recommend go on Yahoo Finance, go on YouTube, you know, search credible users and really read into it. And if you have a part-time job, if you get an allowance, whatever, save a percentage of it. I mean, I say 10 to 15%. Just take it right off the top and put it into a brokerage account if you're over 18. If you're under 18, talk to your parents about opening. I don't really know the word for it. It's like a minor account. What's it called? Like, I don't know. It's like a minor account. It's like under your parents' name, but you can trade it because you have to be 18 to begin to invest in the stock market.
Yeah, and yeah, I think it's a must, honestly. Like, I think that being a teenager or being an 18, 19-year-old right now in 2020, you need to be putting your money into an investing account, whether in some way or another, because it just is in the long term a huge advantage over people. Like most people and a lot of people, like my parents, they just heard about investing when they were 25, and that's when they started. And having like a 5-year head start on most,
it's like the average
is huge in the grand scheme of things.
It blows my mind. I saw like a stat, like people genuinely, I mean, I don't know about now, I hope with this podcast and just the amount of media we have now and on the market, but people didn't start investing till like they're 30 years old.
Yeah.
They don't even start their 401ks till they're like 32 years old. They go, oh, you have a 401k, should I start that? And they're 32 years old. Now, obviously 32 is still young, but can you imagine if they start at 18, 20 years old? I mean, by 32, you'd already have 100% return on your money.
Exactly.
And 100%, by the way, is double your money. If you start with 100% more is double your money. But yeah, I can't stress enough. And one of the biggest fallacies I've ever heard about young investing is you need to be rich to do it, or you need to be. It's really high stress. Like you see stock markets, you see like you go on like Forbes, you go on CNBC, you see these old guys with their hands in their hair and they're just pissing, yelling a bunch of shit. Like that's not what investing really is. That's not what the market. I mean, there's people that do that, but you can do it in a way where, and we'll teach you throughout this podcast ways and advantages you can start small and really see change in your life financially through the market. And we'll also talk about other principles and other ideas that we're learning along the way, because keep in mind, we're not financial planners, we're not financial advisors, but we're going to give you stuff that we're learning along the way that we want to share with you guys. So
yeah, we definitely, we're always, there's so many more years. You can learn the stock market for 20 years and still learn something new. So like, we're still learning too. We're young. We're just trying to make it easier for the people coming behind us to just like not make the same mistakes and having it just be a little bit easier along the way.
There's very few people out there that are our age that are talking about the market in any way, shape, or form. I mean, yeah, It's one thing to actually know about the stock market yourself and do it in the shadows, but one thing is you can be a genius and not know how to communicate. And I think communication is the biggest thing. You have good ideas and you can communicate them. Everyone benefits from that. And that's what we really hope to drive home with this podcast is teaching financial literacy as we learn it along the way. And hopefully we get more financially literate and we can just keep spreading the knowledge on you guys. But yeah, that's basically the biggest mission and takeaway from today's podcast. And at the end of every podcast, me and Julian will give our top 2 picks for the coming week.
Yeah, we'll give you guys our top, some stocks that we added to our watch list or are in our portfolios that we're looking at for the week to come that you guys can check out. And, if you hear a stock or whatever, it's never a good idea to just add that blindly and just buy it.
Don't do that, yeah.
We really just want to give you guys, because we could be wrong. No one knows exactly what's going on in the stock market, and it's just always your best analysis. So I would take what we say and do your own due diligence on those stocks and see if they match what you're looking for your portfolio. But yeah, let's
And one thing too I want to add on before we say our top 2 picks of the week. We're going to try to stay consistent with this. We're going to try to keep the diversity up, 2 stocks every single week. And this is, by the way, a weekly podcast. Every single Sunday we'll be doing one. Upload times will vary, but it'll be once a week. Weekly every single week, keeping you up to date on everything that's going on in the market that happened in the previous week, what our expectations are happening, the following week. And the stocks that I give you, personally for me at least, are from a value investing standpoint. These are companies that I find that I might invest in, that I'm going to invest in, that I like where they're standing in terms of what they basically bring to the table. And they're, in my opinion, somewhat undervalued, but they're not always going to be, So, Julian, take it away. What are your 2 picks for this week?
So, I think I was just going to talk about, how the EV, the electric vehicle sector specifically, is where I'm looking at this week.
Those things are popping off, dude. Those things are popping off.
With Biden election and there's a lot more, Tesla obviously is the king when it comes to the electric vehicles, but there's a company that I'm looking at called GMHI.
GMHI, the ticker.
So,
GMHI.
GMHI. It's considered an SPAC, which is a special acquisition company, aka a blank check company.
Give them the rundown on.
So what the purpose of a blank check company would do is, its sole purpose is to become a different company. So the ticker is just there to change to the new ticker of a company that they agreed to merge with. So GMHI is merging with a software technology company. And this technology is in electric vehicle cars like Tesla, and they make the 3D representation for the cameras in the cars. And this is kind of going...
What's it trading at right now? And by the way, a ticker, when we say ticker, it's the letters of a stock that you would type in on a any stock trading platform, Yahoo Finance, Robinhood. You type in letters, and those are what represent the company. It's just the easier way to shorten.
Yeah.
Yeah. Sorry, sometimes we use terms. I'm going to try my best. We'll both try to define what we're talking about.
Yeah, so it's trading right now at $13.27, okay. And it just announced its merger date. So the date came out a couple of days ago that they're merging on December 1st, and that's when the scheduled ticker change would be. So that's a little catalyst behind that company. But this is a long-term hold, in my opinion, for this company, because right now it's at $12, and that's at IPO.
Hey, when did they say they're going to merge?
December 1st.
December 1st, okay. So coming up.
That's something that I look at for me, and because, the EV cars, they're going to want to have this software in as many cars that they have, and that's going to be a really good growth stock, in my opinion, So, and then one other ticker for me.
This is ticker number 2 for John.
That I'm looking at would be Corsair Gaming.
Oh, I love that company.
This is CRSR, and this is a great company.
So what does Corsair do?
So they make gaming keyboards, and I think you have a couple. But
I do have a Corsair keyboard, but just for the viewer, just
yeah.
For
So they're Corsair. They make those rainbow light up keyboards. They make headsets. They're basically the Apple of gaming products in that industry.
Yeah.
And they just IPO'd a few weeks back, which means they just made their initial public offering on the NASDAQ. So they're actually pretty new to the NASDAQ, and they've been up, I think, over 40% since they IPO'd.
Well, their earnings are incredible, and we're going to talk about a lot of different ways why we think a stock is terrific. We just want to throw it out there and kind of get into the habit of giving our top 4 stocks of the week. But as this podcast develops, we will consistently kind of teach you, enlighten you on different what makes a good stock. What does the ticker mean? What does a PB ratio? And we'll talk about those things. So as you learn with us, we will be telling you, and you'll be getting a better understanding of why we pick the stocks that we do, and hopefully you learn from it as well. But is that all for yours?
Yeah, those are my 2 favorite ones.
So what are the 2 tickers again, so they know?
GMHI.
GMHI.
CRSR.
CRSR. All right, cool. My top 2 picks this week are going to be Callaway Golf, which is CLY, and then Pacific Gas and Electric, which is PCG. Now, I choose Callaway Golf because, the golfing numbers have increased significantly. More than tenfold all across the United States just because of COVID. You can't go into the basketball gym. All the basketball gyms are closed. We're located in San Diego. We're in purple here, and the majority of California is. But golfing is still available. And because of that, golfing has just boomed. You look at all the other, closely related golfing companies in the market, along with Callaway. And I choose Callaway because they are actually being traded at, I think, $13.27 as of today, which is November 22nd. Julian, can you pull that up really quick? Callaway. Oh, my bad. I'm off. My bad. No. Pacific Gas and Electric is $13. $18.76 is what Callaway Golf is. It's a local company to Carlsbad in San Diego. And, what their earnings are, the one thing is their earnings dropped a little bit just given... all companies' earnings dropped in Q2 of 2020, but we see a huge rise in Q3, and we're entering we're in the fourth quarter right now, and I'm expecting huge things from their earnings given the booming of golf. So yeah.
So didn't they do a contract with Topgolf?
They did do I forgot to mention that they did do a contract with Topgolf.
Yeah, and so what's cool about Topgolf actually is they actually are COVID-proof company, if you want to call it that, because they have
like a good hedge, like a moat around them, an economic moat around them.
Well, they have the way that they were set up is just like an indoor golf, and they're staying open, and that's a really big company that is actually they're kind of a little minor catalyst behind their run up right now, but they're looking for like they were trading at around $23.
Yeah.
Right before COVID hit.
Right before COVID hit, $23. We're at $18.76. And I think, and this is $23 before COVID. I think after COVID, I think people are going to be staying with golf a lot longer than they did before.
Yeah.
I have family members that I didn't even know what golf was, and they're going to the range. So that's why I think Callaway Golf is a terrific company. Also, my father has some of their products, so personal attachment there. My second pick is the ticker PCG, and it's Pacific Gas and Electric. Now, you probably know this name. It's a huge company. It's been around for a very long time, but you all might also know them because they did start a lot of the fires that happened in California because of their electric lines. Now, that actually caused them to file a Chapter 11 bankruptcy, and they hired a brand new CEO that is claiming to turn the company completely around. They've since... they've spent billions of dollars now just after what happened with the fires in reconstructing their electric lines because they realized how much of a threat they are. They had huge lawsuits. I forgot the name of the CEO. Can you pull up their stock really quick? Just go in the news section. It's something Scott, something, I don't know. But point is, they have a new CEO. He's going to turn the company around. And in hopes he is. But the one thing that's shaky about them is their earnings, and they have a huge dip in what their earnings and their what was it?
The PCG?
Yeah, looking at it right now. Anyways, their dip is basically they're a little bit shaky, obviously, given what happened with the fires and whatnot, and they're losing of money and their cash flow is running low. But the company went bankrupt. But let's be honest here: are we losing electricity? Are we going to stop using gas in our stoves? We're going to keep using those. So this company is going to be here for a lot longer, as far as I'm concerned. And when a company goes bankrupt, it always provides an opportunity as a buying opportunity, and that's exactly what I took it. I went up 23%. It's a terrific week last week, and I think there's a lot more room for this company to grow. But yeah, that's
I think just to add on to that last stock
Yeah.
there, one of the things, this stock was trading at almost $70 a year ago or 2 years ago, and what Lucas brings up a good point. When companies do go down a lot, or they have
like
big
when they file a
sell-offs,
Chapter 11, which is bankruptcy.
it might not necessarily mean to just buy in just automatically, but once you start to see that the company is showing a sign of a recovery process after a large sell-off, then I would say it'd be a great time to take a position in that company, and that's a perfect example.
I mean, and for a company that we know is not going anywhere. I mean,
Mhm.
if they shut down, majority of California will not have electricity or gas. And obviously that's not going to happen. So they're going to stay here for a while, and I just view it as a terrific buying opportunity, and you should too if you're interested.
So yeah, repeat those last stickers.
So my tickers were CLY, Callaway Golf, and PCG, Pacific Gas and Electric.
All right.
That sums up today's podcast, guys. Thank you guys so much for tuning in, listening to us. We hope that we enlightened you a little bit more on finance and whatnot. Julian, any wrapping thoughts?
Yeah, just thanks for listening to the first one. This one was a lot more about introduction and just kind of talking about what we're gonna do here, but I'm really excited to share knowledge and just have this experience with teaching and learning as we go.
Yeah, and it's just so much fun being younger and learning along the way, and then as we learn, we apply and then teach.
Mhm.
And what works and what doesn't work as we're learning. So we're learning just as much as everyone else is, but our advantage is we want to develop a platform where we can communicate that, and not just stocks. It's all types of finance and mindset and becoming successful, and kind of what I'm learning along the way, as well as we might even start bringing books that we're reading, authors that we love, and really just sharing that with you guys. So thank you guys so much. Terrific first podcast, and it's only going to be uphill from here. Thank you guys so much.